The bigger news of the day is the listing of Swiggy that happened at a 5% premium. It was a very volatile listing. It almost gave up those gains and also gained almost 10% at one point of time. Mangalam is here to get us those details. Mangalam.
Well, Swiggy, irrespective of the early volatility, it'll go down as a good listing. Why do I say that? Because one, most on the street were anticipating a tepid listing. So to that extent, just a positive listing itself was good enough for the stock to, incite some fear of missing out among a lot of people. And that plate on the screen is a teller of that. 0.41% subscribed, or 0.41 times subscribed by the HNIs. Retail just about, managed to subscribe to their issue. It was an issue which was led by the qualified institutional buyers itself, and as a result of which it just managed about 3.5 times total subscription. So one would call it, in this age, a tepid subscription to that. And given the weakness in the market, there was expectation that it will open lower, but no, instead it has opened higher. Why is that? Well, because as a business, you know that Swiggy and Zomato are comparable on a lot of parameters. Swiggy is much lower than Zomato as well. That was understood by the street. So to that extent, the only question then was, at what discount to Zomato does Swiggy settle in? At the issue price of 390 rupees, it was offered at a 60% discount, and thereafter, now currently, the stock is trading at around a 55% discount to Zomato. Going forward, what will be interesting is to see whether the company goes ahead and lives up to the commentary that the management had promised during the IPO itself, which is that of opening 1,500 dark stores over the next 4 to 6 quarters, that leading to growth in their quick commerce business. And the second one is the food delivery EBITDA margins, which currently are just shy of 1%. The industry can perhaps sustain at around 5%. By when does the company get there? So those factors are things that we'll be watching out for. As of now, the stock was offered at a much larger discount to Zomato than what the street was anticipating, and currently it is narrowing that gap with Zomato when it comes to valuation. This morning, interestingly, we had a report coming in from Macquarie as well. They have an underperform rating on both Zomato as well as Swiggy, but as per their own calculations and target price as well, they valued Swiggy at a 37% discount to Zomato, which it currently trades at around 40-45%.
Okay, 14% higher on Swiggy as we speak. Thank you so much, Mangalam, for joining in with all those important details.